Bitcoin right now, right? You would say, okay, well, is it a risk asset? Well, the stock market's at all-time highs. Bitcoin is not. It's near 52-week lows. Well, okay, then is it the digital gold? Well, gold's at all-time highs. Bitcoin is not. It's near 52-week lows. Bitcoin is at an existential crossroads. It needs to figure itself out.
Bitcoin is in a strange and uncomfortable place right now. Stocks are sitting near all-time highs. Gold is breaking record after record. Even silver is exploding. And yet Bitcoin, the asset that's supposed to benefit when the system starts to crack, is still sitting far below its highs. If you're holding crypto, you've probably noticed it, and you've probably asked yourself why. That disconnect is what makes this moment so important. When fear enters the system, money doesn't hide in stories. It hides in assets that the market already trusts. Right now, that trust is flowing aggressively into precious metals, while crypto is being left behind. And that's not just a price issue, it's a signal. A signal that the market still hasn't fully decided what Bitcoin actually is. Gareth Soloway doesn't dance around that reality. He's a veteran technical analyst who's been early on major macro shifts before, and his warning is blunt. Bitcoin is at an identity crossroads. If it's a risk asset, it should be flying with equities. If it's digital gold, it should be reacting the way gold is. But it's doing neither, and for institutional money, that confusion is a deal breaker. In a recent discussion with David Lin, Soloway outlines his bullish expectations for gold and silver in 2026, signaling that gold could get as high as $10,000 in no time. However, he is more cautious about Bitcoin and crypto, not because he is not a believer in what the crypto industry stands for, but because the market and regulatory environment need more convincing. That might come sooner than most people think, because Washington just made an announcement that could change Bitcoin's status in the blink of an eye, and it's all going down next week. In this video, we bring you Soloway's insightful analysis as well as Washington's latest super bullish news on the Clarity Act. If you find this kind of honest macro crypto analysis valuable, hit the like button, subscribe to the channel, and turn on post notifications for more insightful deep dives. Before we dive in, let us know your thoughts in the comments section. Why do you think Bitcoin is diverging so completely from stocks and precious metals?
Yeah, and so number one, he's dead on, and I think almost everyone watching this video is going to agree with that. It's unsustainable. And it's probably one of the reasons, maybe the main reason, why the metals are ripping like they are, specifically gold. And ultimately, we came into the year 2025 thinking there were going to be major fiscal responsibility things put into place. Doge was brought into play with Elon Musk, and we don't even see it anymore. It's not even in existence. They actually dissolved it. And now we see the government spending more money than ever before. And so this is the issue here, right? There's this fundamental fear amongst everyone, you, myself, and everyone watching, that this is an unsustainable path, and us as Americans, us as global participants, we have to start to prepare. And how else to prepare but buy alternatives to the US dollar if this is the trajectory we're on?
So why is Bitcoin not soaring to new all-time highs if Bitcoin is considered an alternative to the US dollar?
It's a great question, and it's one I'm dealing with myself, right? So I am a believer in Bitcoin, but Bitcoin right now, right, you would say, okay, well, is it a risk asset? Well, the stock market's at all-time highs. Bitcoin is not. It's near 52-week lows. Well, okay, then is it the digital gold? Well, gold's at all-time highs. Bitcoin is not. It's near 52-week lows. Bitcoin is at an existential crossroads. It needs to figure itself out, because then what is it? And the reason this has to be, and there's a lot of Bitcoiners out there, hodlers out there that are going to say, oh, well, it's a little bit of this, a little bit of that. But when you're talking to the masses out there, the people that are buying in their ETFs, the ETF in their portfolios, they need to know. Pension funds need to know, right? Is it a way to protect capital, or is it a risk asset? And without that, you're not going to get the next wave of buyers. And so we have to figure this out as people that believe in Bitcoin, to figure out what it is, and it has to start behaving like that.
Yeah, okay, let's go back to Bitcoin in just a minute and talk about key levels. Let's talk about key levels of gold and silver. Anytime something moves parabolic, it's bound to move parabolic the other way. That's what you taught us all throughout these years. And yet,
and that is the truth. The
Yeah.
question is when, right? And
Yeah.
timing is always key. And listen, just because it's gone up so much, it generally, because things are fundamentally shifting in the global sphere and in the US, it's probably not going to parabolically drop as much, but you will have a flush out. That's what we know from technical analysis. Now, the bigger question is where, right? I would have thought it would have been this pierce of $5,000 per ounce. We have not seen that yet. Now, what we can do is go to the logarithmic chart and start to take a look here and see. So I flipped it to the logarithmic chart and we go back here. And what we do is if we flip over to a larger time frame, we start to notice that, again, you had this incredible move in the 1970s into 1980, this long base, another incredible move here, and a consolidation base that was shorter. And by the way, think about this. So, and this is just a little side note, but it's fascinating. Look at how long the consolidation base was here, and look at how long the consolidation base was here. Much shorter in the 2010 to 20 range. Now, why? Ask yourself why. Because here, this is where we actually had fiscal responsibility. We actually had a balanced budget at one point. Here, no balanced budget. And the problem is these down cycles in gold, if we continue on this trajectory, are going to get shorter and shorter. So wherever gold tops, and I'm not going to pretend I know at this point, it's going to be a much shorter bear period or consolidation period unless the fiscal restraint is restored. And that's really the key crux here, folks. I mean, it just comes down to people rushing to diversify to protect themselves. They're buying insurance on a sinking ship. We see the ship sinking. We've got to buy insurance. And the thing is, listen, when it does correct, we'll look back and say, oh, there was a signal there or there. But right now, I don't see it myself. I thought the Pierce of 5,000, 5,100 would have been a little bit of that reversal. And then what we've seen here just in the last few days is more tariff threats come out, the Federal Reserve coming out with their statement. And all that's happening is people saying, wow, I believe in the U.S. financial system less and less. And they're buying more and more. Now, again, there will be a reversion on this trade. My guess is, and it's hard to know the top, but my guess is when we look at the reversion here, and let's take it off the logarithmic chart, is what we'll start to see is a retrace to a reasonable pullback level. Like right here, we could see on the move up, this is where we stalled out, which means when we do correct, this 4,300 likely becomes your next base point, right? That's where you're going to hold on to the major gains, most likely, and potentially turn up unless we see that fiscal responsibility built in. Now, David, you remember I think it was 2013 or 2012, the countries like Italy, Greece, remember the market eventually imposes austerity by certain means. And I do think the U.S. is going to face that within multiple years, maybe within 3 years. The markets themselves will start to impose austerity regardless of whether our political players do.
Hold on. What do you mean by austerity? Who's going to impose austerity? Not
well, so for instance, who's going to control the long end of the yield curve, right? If we look at the 10-year yield, the 10-year yield has just broken out. Look at this. We had major resistance all along this area right in here, and we kept on hitting it. Then we bull flagged and we broke out. Now it's beginning to move up. And so my point is austerity is put into place by interest rates, right? When you have the long end, which can't be controlled by the Federal Reserve, and those interest rates start going up, it's literally going to make it so we are going to have to cut spending and get our fiscal house in order. And really the rest of the world at some point will force us to as well by not buying our debt. 6,000 at this point would be, unless something changes, right? And so if we flip back to the gold chart here, at this point, again, if we look at certain trend lines, right, and I'm a trend line trader, is that you really don't have anything, right? We've gone through this level here. We've pushed through that. We had a parallel here of support, which kind of mirrored this right here, and we've now blown through. And so this is the thing, is when you get in price discovery, sometimes as a technician, you just have to step back and say, hey, listen, it'll go until it stalls. And once more sellers come out of the woodwork or something occurs, then it will have its dump. And then I can start trading it again based on technicals. But right now, the technicals are out the window. But silver right now is more of a meme. You have the same verbiage as it'll never come down. It's a new paradigm or all of these kind of same things that are going on. And we can flip over to the silver chart to take a look. Silver had a good day today, but gold, interestingly enough, is the one that made a new all-time high. Silver did not quite make a new all-time high and still has a topping tail in the daily chart here. And this is a technical reversal that we saw a couple days ago on silver, that until we have a daily close above it, that is now in stone as a top signal for silver. And again, it could be negated tomorrow I'll be watching, but at least in this situation, and it is so similar. The same way, if I ever say anything negative on silver, the attacks on YouTube, they are massive. Just like if I ever back in 2021 said something about like, Dogecoin, if I ever spoke against that, it was the same sort of psychological impact and reversal.
Silver's recent price action really is an anomaly when you zoom out. This isn't a clean, orderly bull market. This is a metal being pulled in multiple directions at once. On one hand, you've got real structural forces, tightening supply, industrial demand tied to energy transition, and years of underinvestment in production. On the other hand, you've got behavior that looks eerily familiar: crowded positioning, emotional conviction, and a growing belief that pullbacks simply won't happen. That combination is rare. It's why silver feels unstable even as it remains fundamentally supported, and why small technical signals suddenly matter much more than usual. And this is where the comparison to Bitcoin becomes unavoidable. When capital gets nervous, it doesn't spread itself evenly, it concentrates. Right now, a lot of defensive capital has chosen metals over crypto, not because Bitcoin is dead, but because uncertainty favors what the market already understands. Silver's volatility is what happens when fear and momentum collide in a relatively small market. Bitcoin, by contrast, isn't even being allowed into that trade yet, which raises the uncomfortable implication. If silver is overheating because capital is rushing toward perceived safety, what happens when that same capital decides Bitcoin does belong in that category? Before we delve more on that, let's hear the rest of Gareth Soloway's analysis on stocks, the dollar index, and what it all means for Bitcoin.
What does the world look like at 10,000 gold?
Oh man, the hard questions. You're bringing your A game today. At 10,000 in gold, I would assume we are at a whole new scenario of dollar or de-dollarization. I would think, and I think honestly, that's a big thing of what's going on right now. If we look at the US dollar, we've just seen one of the biggest drops. In fact, the biggest drop in the DXY since the tariffs were levied last March or April in a 7-day span, right? So 7 days down like this. Now, part of this is intervention with Japan, right? We're trying to prop up there, and you played that clip from the FOMC press conference. But at the same time, you are at a pivotal road. Look at this on the DXY. This is scary, folks. So this is your financial crisis low on the dollar, just as we were getting into the heat of the financial crisis. This was June 2008. And look at this zone of support. The dollar has been riding up. Now, we've heard about de-dollarization for ages, but until this breaks, I'm not a real believer, but it's looking like it's getting ready to break. And once this breaks, there's probably no stopping the US dollar from depreciating maybe as low as the financial crisis lows back to the low 70s on the DXY. And that's a scary scenario because remember, this is going to import inflation, folks. A weaker dollar, when we import so much of our goods, it is going to bring inflation up. And then you look at copper, then you look at silver, palladium, platinum, all of these things, live cattle prices, all near all-time highs. Now, listen, grains are still low. I still actually like those as a defensive play, but there is bubbling up inflation. And I do think that's the kind of the scary part for 2026 that could surprise the market, right? The economy, we heard from Jerome Powell today, the economy's hanging in there. It's still looking a little bit better. But what about inflation? Because I look everywhere and I'm seeing inflation bubbling up, and I have a feeling everyone watching is seeing the same thing.
Okay. So once the dollar breaks down, what does that mean for, let's just take the S&P 500 in particular? Does this have any impact on the stock markets?
Yeah, so again, it's going to have a big impact if it's in free fall, right? So if we just inch down a little bit every month or so, it's going to have a very minimal impact. It's kind of like, what do they say? You put I won't even get into it, but something in hot water and you heat the water and it's heating slowly. They don't realize it, but if obviously boiling water is a different story. But the idea here again is that the dollar, if it starts to break down significantly below the level we just discussed, is going to bring this market in because, again, we are so reliant on the world buying our debt, right? And the dollar being the reserve currency, it is going to shake the fundamentals here. And you can see here on the S&P, let's go over this, right? So this is what's concerning me. Everyone, listen, what I think is so interesting is so many individual investors were coming to you and asking you, is the market topping? I don't know if they were talking about gold and silver or if the stock market, but in relation to the stock market, this is what's concerning. Look at where we are on this parallel. Here's your COVID low. Here's your bear market low. Here's your liberation sell-off low, right? Then you have your highs here. Perfect parallel. Look at where we are. In fact, the last time we touched it was in October. And we're now at a point, look at this trend line. Here's your liberation sell-off low. We drag it right up. We've broken this trend line. And going into today, we are now basically at the underbelly of resistance or dual resistance trend lines. Now you look at after hours, right? We look at Microsoft down on earnings. We look at Meta. Meta's up on earnings just a little bit. Let's see where Tesla's moving up. So this is going to be interesting tomorrow to see who has more power here to keep the S&P rolling higher or starting to bring it down. But again, Microsoft seeing some sell-off in the markets in the after hours here. And so what I would expect is if we see a sudden drop, a sharper breakdown in the dollar, the fear, just if we all remember what happened in COVID, right? When COVID March of 2020 occurred, we saw the stock market decline and gold also fell initially. And that would be my expectation. So basically the idea is that fear permeates all. And when people get very scared, they sell everything to be safe. And then once the dust settles, they say, all right, let me start buying gold again, because again, this is a bullish sign. So again, fear triggers the sell. And then very quickly, we saw gold and COVID recover and actually move up substantially. I would expect the same thing. So initially, I think they fall together. Maybe that's where the correction comes in. When the stock market corrects, gold corrects as well. And then I think gold, after a quick correction, starts to regain and move higher.
Okay. Key levels for the S&P 500 at this point. We're almost at 7,000. What's next?
Yeah, so what I'm really watching is these two trend lines, right? We have the bigger parallel here going back to 2020 and this one from April of 2025. And you can see how it basically tagged each of these lows right through here before we broke down. Watch this zone right up here, basically between 7,015 and 7,050. If the S&P can get above that, you now are in price discovery mode, and we could see something a la a move like we've seen in gold to the upside. If it gets rejected and we can't get above here, at some point, path of least resistance is a much bigger move down. So really, we look at the mega caps reporting, we look at all these factors coming in, inflation data is coming in the next few days. Watch closely to see, can the S&P get through this level? If it does, bulls continue to rule the roost. But if we can't get through this level in the next 2 weeks, I think you're looking at a 15-20% drawdown in the stock market.
Okay. That brings down Bitcoin with it, or no?
Yes. Unfortunately, yes. Bitcoin is again, has performed horribly. Look at this trend line right here on Bitcoin. It's even broken short-term technical support. Today, we saw, again, a rally on Bitcoin to the underbelly of this trend line, and it got rejected, is now flat on the day. But this, again, is what we would refer to in technical analysis. This was a bear flag, right? A move down with a lot of sideways chop, and now it's potentially broken. As if it can't recapture 90,000, this is going down to 70,000.
Let's address the big elephant in the room. This idea of capital eventually rotating from metals into Bitcoin. There are really two ways to look at it. The optimistic view is that this is simply how macro cycles work. Capital runs first to what it understands best. In times of stress, it chooses familiarity over innovation. Gold and silver have thousands of years of credibility, deep liquidity, and regulatory certainty. Bitcoin, despite its growth, still sits in a gray zone. From that perspective, crypto's underperformance isn't a rejection, it's a delay. A pause while the market waits for clarity, structure, and permission. But there's also the harder interpretation, one crypto investors need to be honest about. It's possible that the rotation is coming narrative has become a psychological crutch, a way to explain away weak price action without confronting the underlying issue, uncertainty. Markets don't price potential, they price conditions. And until Bitcoin clearly operates within a defined legal and institutional framework, large pools of capital will continue to hesitate. Fortunately, Washington is stepping in directly. After weeks of gridlock, the White House is convening both banking and crypto industry leaders to revive the stalled Clarity Act. This meeting is focused on one of the most contentious issues in crypto today, whether stablecoins should be allowed to earn yield. Banks argue it threatens deposits and financial stability. Crypto firms argue it's basic competition and financial innovation. The standoff became so serious that Coinbase and other industry leaders withdrew their support entirely, saying they'd rather have no bill than a bad one. What's important here is not which side wins, but the fact that the Trump administration is forcing resolution, now, not months from now. That alone sends a powerful signal. This is what it looks like when a government is serious about becoming the crypto capital of the world. Rather than letting the bill die quietly, the administration is bringing both sides to the table to hammer out terms that can actually pass. And this goes directly to Soloway's point about crypto needing to define itself. The Clarity Act is designed to settle who regulates what, reduce manipulation, and bring crypto markets closer to the transparency standards seen in mature asset classes. Just like the Senate Agriculture Committee's vote on a major market structure which, if approved, would reduce wash trading and price manipulation by nearly 70%. So when you step back and look at the full picture, the contrast becomes clear. Precious metals may finally be breaking free from decades of suppression, but crypto is laying the groundwork to discover its true price for the first time. Less manipulation, clearer rules, institutional access without ambiguity. If this analysis helped you think differently about what's happening beneath the surface, hit the like button. It really helps the channel. Subscribe if you want grounded macro and crypto analysis without the noise. And let me know in the comments. Do you think Bitcoin's moment is delayed or being quietly prepared? Thanks for watching.